This episode of Bulletproof Cash Flow is brought to you by Realty Dynamics. Learn how people like you can build substantial passive income while creating wealth for the long term through real estate investing. Visit rdyne.com. That's RDYNE.com.
People are really looking for time freedom. Ultimately, what it really comes down to, they want the freedom. They don't necessarily want to retire. I find more and more today than ever, some people say, the sense of quitting, just quitting on life, not just quitting a job, but just quitting sounds horrible. But what they do want, they want to be work optional. They want to be able to work because they want to, not because they have to. Have the option to show up to work or not, right? That freedom and flexibility is what they're looking for. That time freedom, especially to be able to spend time with family before their family's up and gone and no longer want to spend time with them.
Working because you want to, not because you have to, is financial freedom. And we want to help you create that. Welcome to the Bulletproof Cash Flow Show. We're going to teach you how to achieve lifetime financial freedom through real estate investment. Your host is a multifamily syndicator and property developer. He's done deals reaching into the hundreds of millions of dollars. You'll hear from experts in all aspects of real estate investment, finance, development, and management. Everything you need is right here. This is the Bulletproof Cash Flow Show. And this is your host, Augustino Pintus.
Quick question. How'd you find this show? Maybe a tweet or an Instagram post? Well, no ads here. Just a small favor to ask. If someone introduced you to this podcast, pass it on. Share, review, tell a friend. It means the world to me. Thanks a ton. Hey everyone, it's Augustino. Financial freedom is the ultimate goal for anyone who works hard to earn money. Now, whether it's in the corporate world or entrepreneurship, your retirement years are closer than you think, so you want to build your wealth as early as possible to secure a financially comfortable future. Well, our next guest knows all about this as he helps people increase their cash flow by creating passive streams of income to eventually achieve that financial freedom we're all looking for. Now, over the past 2 decades and over 900 clients at this point, he knows that cash flowing assets are the way to become financially free. Now, he was able to retire at 28 years old, and he now teaches other people how to do the same thing. He teaches other people how to preserve their wealth and show businesses how to build wealth quickly and safely, and that's up to snuff with the IRS. Right. So now with all that, I'd like to welcome Chris Miles to the show. Chris, buddy, thanks for coming on, man.
Hey, it's good to see you again, Augustino. It really is.
Good to see you too. It's been a little bit. Now, guys, if you like what Chris has to say, you can reach him at his contact page, moneyripples.com. Okay, Chris, go ahead and tell listeners a little bit about what you've been up to since we last spoke.
You know what? I've been just enjoying the ride. I'll tell you, it's kind of fun. It's almost like watching a reality TV show, which I guess you call it reality. But, when you get media that just creates crazy advice and news, and they're just trying to create more and more news and fear mongering or emotional polarity and things like that, it's hard to even know where to turn. And what I've noticed last year or so is that people are kind of stuck. They're frozen. They're not really sure what to do because there's so many contradictory factors. I mean, the one thing that's constant, of course, from the financial advisor standpoint is that they're going to tell you, keep putting that money in that 401k. It's going to be okay. And, and I think that's a bunch of crap. It's just, there's a lot of people that are going to be trapped here in the next few years or so and realize that they just screwed their entire future by following the advice that media is giving them right now. Yeah.
Well, hey, listen, I was one of those guys too. The whole 401k was the way to go. Mm-hmm. And if you didn't, you're an idiot. So you had that. And then I remember being at 19, the HR rounded everybody up and they said, some guy rolls in and says, if you put just $100 a month in this 401k, that was 19. But by the time you're 65, you'll have $1 million. And I'm like, wow, $1 million. How about that? Now we know $1 million doesn't do anything these days. I mean, which is kind of unreal if you think about it, right? $1 million was once, 30 years ago was a lot of money, Mm-hmm. I'm not saying it's not a lot of money today, but the buying power is far less than it was back then. And it continues to even drop way faster as we start exporting all this cash all over the place, So
all those
building
false
wealth.
assumptions. Yeah, I mean,
that's right.
Because you're right. Like he's no different than what Dave Ramsey's been saying, right? I've got Twitter posts that Dave Ramsey says, you put $100 a month away for the next 40 years, you'll be a millionaire. You have 1.176 million. Nobody should be broke. Everybody should be a millionaire. But the truth is, one, if you actually put in a financial calculator, $100 a month for 40 years at 12% interest, which is what he's assuming, which that's another debate too. He says 1.176. It's actually 979,000. So even Dave Ramsey gets it off by like $200,000. He can't even do math right. And then on top of that, like I said, the 12%, the market's never done that. Now, someone might argue, say, well, actually, it did between this time. Yeah, you have to find the perfect time period, the perfect moment, like the 2010s to find that period. But in truth, no, it's not that great at all. I mean, I actually just redid it last week. 7.73% is the average return over 30 years. So if you put in, and just so you know, most mutual funds never even get the stock market return of 7.73%. So if you put in 7%, you start to find out, wait, I was supposed to be a millionaire at $100 a month. I got $300,000. And then to add pain to this, which you just mentioned with inflation being even worse, you're like, man, $300,000 is going to buy me a car in 40 years. Maybe, right? Maybe a used car in 40 years. That's when you realize, oh, this stuff is broken.
I think part of it is that people think about money as a very static type of, I guess it's currency. It's static, but people don't realize that the dollar is losing value, especially back in 2020 when the government flooded the entire world with the currency, not just the United States, the entire world.
Yep.
And when we started sending money off to, remember that bill that was going around and people were wondering why we're sending money to all these foreign countries, like for all kinds of ridiculous things. Why are we doing that?
Yeah.
Well, it's because we're exporting the inflation is what we're doing.
That's right.
We're exporting the inflation, right? Because if we kept all the money here, then nobody would buy from us. So that's right, because the valuation of the dollar goes down. People don't understand that part. They don't get it. It's the same way that right now we're sending money to both the Ukraine and Israel, and all this money is we're exporting the downside. The inflation is all we're doing.
Right.
Eventually, that money's coming home. It needs to be absorbed. Right.
That's right. Well, and you're saying right now, globally, I mean, we got Europe. I mean, like Turkey has like 10+% inflation right now. They're going through major hard times across all of Europe. You're having big recession, possibly depression happening in China right now. And China's like the US. We like to lie about our numbers and fluff them a little bit. US gets mad at China, but the truth is we do it too, because we tell them, oh, inflation's only, 3.4% now, 3.6 today. It's like, oh, bull. We know it's still up around 8 or 9. Like, stop pulling the wool over our eyes. We know it's different. So we got that. And I think the big point is this, like, if someone really wants to be bulletproof, I think the best thing you could do is buy real assets, buy the assets that do appreciate when we have all these people saying, oh, there's no inflation or it's coming down. When it's not, when you have the government trying to lie about unemployment rates, they're trying to lie about inflation numbers, all so that they don't have to keep raising your Social Security, cost of living increase so they can stretch out Social Security longer before they go broke. I mean, that's all just kicking the can down the road. The thing is, you want to be the person that's doing the opposite. You don't want to be buying stocks, which don't have any real value to them. You want to be buying things like real estate. You want to be in business that has a high commodity or can create a great value or service in the world. That right there, that's what's going to help you get through any recession or possibly depression to come. Yeah.
So tell me a little bit more about how you're helping people these days. Because certainly we're in very wacky times. I guess it's very similar to what you had to probably went through in 2008. I know you really help people strategize in terms of acquiring assets or investing in assets outside of Wall Street. Maybe we can tell a little bit more just for those people that aren't familiar with what you do and how you do it.
Yeah, we're really doing a combination of things right now because, 2022, a lot of people were saying, hey, you know what? You should never hold cash because you're going to lose to inflation. So what did I start doing in 2022? Holding cash. Because whatever the public says, if you do the opposite, you'll win, right? Whatever the media tells you to do the opposite and you'll win. It's when you start following the news, the old news, it's already old news, right? The money's already been made. And so usually the money's flowing away from it when everybody's talking about it. So I do the opposite, and that's paid off with huge dividends and has for my clients too. So we do a combination of strategies. It's not just like a one silver bullet, one size fits all. We help people with passive investments and connecting them to deals. We don't actually ever offer or raise capital. We're not investment advisors, but we do help people strategize to figure out how to get their money out in liquid, get it out of prison, and then get it then out somewhere else to work for them, right? So it could be real estate investments. But it may not be buying the house in your backyard, which is a pain in the butt. It might be buying a turnkey rental. It could be loaning your money out right now, which has been awesome because right now there's a lot of real estate investors that are on short supply of cash because they were overly aggressive, or even if they're not overly aggressive, they have opportunities because people did have money out. Now people are trying to unload and sell off assets. Real estate, the investment operators that have really the cash on hand to do it, they might be raising capital either through loaning or through funds, right? And then turn around and paying you 10, 12, 15%. There's a lot of opportunity to make a good money right now in the lending space. Oil and gas is another one. I mean, now oil prices are starting to come back up again. I love it. I'm in oil and gas right now. I love it when the oil prices go up. Not so much when I drive, but I do love it when it comes to making more money. Raw land has been another awesome one too. So again, just trying to help connect people to the right deals. Are we doing syndications? Are we doing things with self-storage or apartments, which have sucked lately, right? Maybe 2024 will be a better year for that. So just really finding the opportunities. And I'll tell you right now, being liquid is really important because although I still have people investing, we're also prepping, right? We're building up this war chest because I think more and more people are going to go broke and they're going to be trying to fire sale their assets. And when they do that, you want to have the cash to bail them out because that's where you get the best deals. And so a lot of our clients now are starting to do what I do, or started doing, especially since 2022, is we're building up our own personal bank, right? Like I talk about infinite banking a lot, and not from the traditional standpoint you hear about, like, hey, you can build this up to you're 65 million years old, and then you have tax-free income, like a lot of those guys teach, right? I think that's crap. And they also overcharge you on insurance costs, which is why they have to tell you to wait that long because you pay too much in fees. If you design it the right way, you can make it cheap now to where you have access to it in 30 days and still be able to use it to invest and do whatever. And so we've been building up a lot of our cash there where it's now inflation friendly because as inflation goes up, it drives the interest rates up too. So we put our cash there. It's protected from lawsuits and creditors. It's tax-free. Government doesn't acknowledge it in the sense that it's not an asset that people can sue you for. So in most states, it's 100% protected. And I can get that money to pay me in two places at the same time. Because not only they pay me money on this money, like tax-free income, but I can get a low interest rate loan against it and use that money to then invest, generate all this cash flow. And then I can use that to also help kind of pay down the line of credit and cycle the money and make money in two places at once. So, I mean, I kind of gave the quick, brief answer, but that's kind of what we're doing right now is that we're building up reserves, building it up in places outside of the banks where they've been failing, putting it in more places like insurance companies where they're safer and pay better returns. And then also using that money to then generate passive income right now. Because I think really what we're seeing right now, like income is going to be the thing that people want. It doesn't matter what the promises of growth will be necessarily. I think growth investments and assets can be good, but I think in this environment, more and more people are going to be saying, okay, that's great that someday I may have my money double in 5 or 6, 7 years. But what about right now? How do I actually help my situation right now as inflation's raging, interest rates are raging, even on credit cards and whatnot, and houses, and people wait for house prices to drop. It could happen, but in certain areas it will happen, or it's already happening. But a lot of the parts of the country, it may not happen at all. It might still stabilize or even keep going up. So you got to be really watchful and be liquid and be safe with your money. Excellent. So if you had an avatar right now, maybe walk through like an avatar. Maybe it's an investor. Maybe it's someone that's sold off some assets and want to put some money to work. How do you help that individual protect their wealth or invest it in some sort of cash flow, or like, give me an example. Yeah, I'll give you a few. I had one client where he was with the military for a while. He was fortunate enough to save up $1 million in his retirement plan. By the way,
Nice.
Fidelity came out with their statistics. Of their 45 million clients, only 1.5% have $1 million or more. 1.5%. Baby boomers a lot more than 1.5%. So that gives you an idea. It pretty much means there's a 99% chance of failure with these 401k plans. On top of that, though, of that 1.5%, 35% of them that were polled by Transamerica said that they think it will take a miracle to be able to retire. Because the truth is, and just like what happened with Dan here, Dan had $1 million in retirement account. The financial advisor said, well, good. If you want to let this money last so you don't outlive your money, you should only pull out 3% a year. That's $30,000 a year as a millionaire. That's a broke millionaire. You're living below the poverty line, right? No wonder people are fighting for Social Security, because it's the only thing that bridges the gap. And even then, it's not in a good gap, right? So he came to us. He said, all right, there's got to be something better. He heard our podcast, the Money Ripples podcast. And so he reached out to us and he said, can I do something different with this money? Because I've heard about these syndications and I've heard about real estate, but I don't really know what to do. Well, long story short, we figured out with his IRA money and stuff what he could be doing with that. He did invest and bought a couple duplexes that are kicking off some cash flow for him. He also, he did invest in like some oil and gas related things. And this is oil and gas where you get paid rent on the land and you get paid royalties. So you kind of double dip there too. And then he also did some like apartment syndications and whatnot. And what was supposed to be $30,000 a year, now the million's generating $130,000 a year. Some of it with tax advantages. And of course, the cool thing is that we're not touching the $1 million, right? So he's still got the million. It's kicking off a lot more income. Another example of another guy, like I had a guy he's a chiropractor and he had some money as well that he could use, but most of his was trapped in equity. He had equity in his house and he had equity in a rental property that he had for like 20 years. And of course he lives in California. So, real estate there sucks. And
Sure does.
anyways, and now his goal game plan was in 6 years, I want to be debt free. So he's like, I'm going to pay off my mortgage on my house and pay off the mortgage on my rental property. I'll free up about $4,200 a month total. That was his game plan. Basically, I'll have $50,000 a year in 6 years. And I said, well, you could do that, but you also have $700,000 of equity sitting inside your property, your rental property. Now he had equity inside his other house, but that was like, don't touch it. No. Like, he's the kind of guy that, Dave Ramsey would say, you're my bud. Right. And so I said, all right, come on, this rental property, what do you really cash flow? $200 a month. Okay. If you pay off that mortgage in 6 years, it'll be $2,400 a month. Okay. So really at $200 a month, you realize you're only earning a 0.3% return on your equity. He's like, well, yeah, but when it's paid off, then it'll be, now more like 3% return on equity. And I said, if you were just to sell this property, transfer that money over tax-free, 1035 it into another, even multiple properties, right? It could be one or it could be multiple. You could get that $700,000, even generate a 10% cash on cash return. That's a $70,000 a year increase. That's better than $2,400 a year that you're getting paid right now. And he fought me on it for 2 years. Finally, and it's funny, I just got an email from him today. He said, Chris, guess what? This is now 5 years since I first spoke with him. So not quite that 6-year mark. He says, all right, I sold the property. I can't believe I didn't do it sooner. He's like, I just bought my 6th there down in the Southeast and I'm cash flowing $8,500 a month. And
there you
so
go.
over $100,000 a year, right? Again, he was trying to fight to get from $200 a month to $2,400 a month. Now he's over $8,500 a month and he's still got a year to go before he was going to try to hit that $2,400 a month. So what we really try to do is get your money out of prison and figure out now, how do we get it out to work harder for you and do better? And surprisingly, with the way that inflation's happened, even within, property values, there's equity now that people have. Like, what do I do with this equity? There are sometimes even ways you can tap into the equity without paying a bank, without taking out a loan. There's ways to do that too. And there's things you could be doing where you've got cash sitting on the sidelines or sitting in the market that could be tanking. I mean, it's already since July, it's kind of had a rough little mess that it's lost some of its gains for the year. I predict, I could be wrong, but I predict it's actually going to go lower than it hit even at the end of 2022. So I don't think we're done yet. I mean, this is not, people are saying, oh, it's still an up market. No, we're down from 2021 still. That's not an up market. That's a market that says, I'm about ready to run out of gas. I'm just getting warmed up.
Oh yeah, no, listen, we're in a recession right now. I don't care what the media says. I know there's an election coming up, and the media is gonna spin everything and anything just to, whatever. I don't want to turn this into a political discussion here, but
Well,
unfortunately, we know that politics and money have now come, hand in hand, so to speak, and now it's one and the same almost, right? Which is unfortunate, but. I guess what you're saying, though, is that it's very rarely one strategy that's going to get you to where you want to go. It's going to take up multiple strategies to get you where you want to go. And it involves really being smart about your money, like actually managing your money. And I think that, to your point earlier, I think there's this whole communication that previously anyway, you turn everything over to Wall Street and let them manage your stuff. And I did the same thing. I was that guy when I worked in corporate, and I just worked my 40 hours, 50 hours, whatever, put it into the 401k and looked at it every so often and swore at it and just, shook my fist at it and then just close the envelope and move on. It's ridiculous. It's ridiculous. You're not really running it,
Yeah.
That's not good. That's not a good way. It's not a good way to build a financial future. Hey there, amazing listeners. I just wanted to take a moment to express my gratitude for being part of the incredible Bulletproof Cash Flow community. You guys make the journey worthwhile. If you found some value in what I'm sharing, I have a small favor to ask. Could you please subscribe to the show and leave a review on Apple Music? Your support means the world to me. It helps us deliver quality content to like-minded investors just like you. Thanks again for being awesome, and let's dive back into it.
Not. I mean, when they tell you set it and forget it, right? I mean, that's a perfect salesman's way to say, please don't look at it when it loses money and just know that over time it's going to go up. Well, set it and forget it. Let's apply that to anything else in your life. What if you took that mantra with your spouse, your husband or wife, set it and forget it. I'm just going to forget about my marriage and not even do anything with my marriage. Are you going to be married anymore? If you set and forget your kids, are your kids going to turn out well? If you set and forget your toothbrush, you're not going to have any teeth. You're going to lose it. Whatever you forget about, you'll lose. Set it and forget it just means you're going to lose more money. The best thing to do is be a wise steward of it. Watch it carefully. I know you're all about being bulletproof. That's a big part of it, is watching your money and ensuring that it's actually taken care of, that you're being a wise steward, you're making wise decisions with it so that it can continue to grow with you.
Yeah. That's 100% right. It's it's become a little more trickier to do these days because that's kind of the reason why you do what you do, is because to me it sounds like it isn't like you're just doing one thing, like the whole infinite wealth thing, or you're just doing it sounds to me like you're more of an idea guy that really helps folks look at their situation, look at what they have going on, and figure out a way to best preserve as much money as they can. Like, for instance, maybe you have a guy that's going to get, he's got 1030, he's going to do a major sale. He's got a 1031, a bunch of money. How do you protect that cash from Uncle Sam stealing almost 50% of it for doing nothing? How do you protect that? Right. And that's important to figure out, and for many folks, especially people who are listening to this show, it's a big deal for them. And this is one of those things you really have to have a plan for. It's worthy of at least a discussion about it, right?
Yeah, and every plan should be customized. I think so. Like, sometimes people will hear me talk about buying a rental property or something. They'll say, "Oh, I don't want to do that." Well, good. There's other options, right? There's some of our clients that say, "I never want a rental property," and some that say, "I want to have a lot of them." And the great thing is you can kind of customize based on your own flavor, your own investment. And yeah, there's some timing issues, because if you would ask me, hey, what's your best return investment from 2 years ago? I'd say turnkey rentals. Like, I can get 12% plus cash on cash return because rates are low, rents are high. Today, not so much, it's not going to have as great cash and cash. It can still have good growth over time, but it's not going to give you a lot of cash flow. There might be other things like when we talk about with lending, or certain types of funds and things like that. There could be great opportunity there. Apartments were great 3 to 5 years ago. Now, for the most part, it kind of sucks, for a lot of people in the apartment space, right? So there's always a time and a season. And that's why you never, ever want to just go with somebody who just gives you that bullet, that silver bullet answer, right? Like, here's the thing you do, works at all the time. No, you gotta still adjust and change with the times as well, and adjust and change based on how you want your life to be. Because the last thing you want is investments that you hate to where it feels like it's another job for you. You never want that.
That's, you know what, that's absolutely key. That's absolutely key, because right now, it's funny. I had a conversation with someone about this very same thing. Big multifamily guy, just like me. We bought a lot of multifamily, but we've shifted our focus. Now it's funny because he's doing commercial, we're doing commercial, like retail, right? A lot of retail
Yeah.
stuff. Thing is that we do single tenant net lease, corporate guarantee with either a large corporate or a large franchisee, compared to what he does. He does strip centers, but same concept, right? It's commercial. It
Mm-hmm.
isn't like we hate multifamily. It isn't like we're not going to do multifamily anymore. But when you consider where the market is shifted, you have to adjust your strategy to go after the one's going to yield the best return for the amount of risk that you're going to take, and make the investors happy about what it is they're investing in, right? So
That's right.
it really involves being a smart entrepreneur and really protecting your wealth. That's what it really comes down to. You know, it really comes
Absolutely.
down to that. Yeah. Yeah. Good. Good. So how exactly, or what sort of people are engaging with you today then? Because today was certainly a very different situation. I'm sure you're hearing a lot about crypto, and everybody's got, like, this curiosity about that. I'm not a big crypto guy. For me, it's not, if it's not real, I don't like it,
Mhm.
but that's just me, right?
Yeah.
Like, what sort of folks are engaging with you today? What sort of folks do you find you're able to help, and which ones can't you help?
Most of the time, it's from an emotional standpoint, right? People are really looking for time freedom. Ultimately, what it really comes down to, they want the freedom. They don't necessarily want to retire. I find more and more today than ever. Some people say, I don't, the sense of quitting, just quitting on life, not just quitting a job, but just quitting sounds horrible. But what they want to be work optional. They want to be able to work because they want to, not because they have to. Have the option to show up to work or not, right? That freedom and flexibility is what they're looking for. That time freedom, especially to be able to spend time with family before their family's up and gone and no longer want to spend time with them. Those kind of things. Even pursuing passions. I had one client says, he's like, honestly, I just want more time so I could start doing things I love, like oil painting. And I would never have guessed he would have said oil painting, but that's what he wants. Like, to him, that's his ideal life. He still wants to work a little bit, but work less hours so then he could still pursue his passions, spend time with loved ones, and do whatever the heck he wants to do. And those are the people that tend to look for it. And now the people that qualify to work with us usually have to have at least $200,000, $150,000, $200,000 just to have enough options. Because, in the syndicated space, for example, most people say you need at least 50,000 or 100,000, depending on the deal. Well, if somebody's saying, I got 25,000, what do I do? Not much, there's a few options out there, but you don't have a whole lot. But once somebody gets over 150,000, then you can start doing more. You can diversify a little bit and have definitely better results. So those are really
Yeah.
the people that seek us out. I like to think they're kind of like me. They like to question the status quo. They're not cool with ordinary or average. They want an extraordinary life, and that's why they're willing to do something different, because they know that they follow the same path of the basically money in prison, 401k, the typical advice you're getting from every other financial person out there. We've already seen their future. There's just like the future, like my dad's, who's trying not to outlive his money, right? And he's having a hard time with it. And the market took away returns. And so he had to delay retirement to his 70s because Y2K and then the Great Recession hit, for all during the time he's about in his late 50s or into his 60s and 70s. So those people that really look for us are like those that say, you know what? I can see the writing on the wall. Something's never felt right with me when I hear financial advisors. I want something better. I want something different. I don't want somebody who doesn't get paid even if I lose money, which is what financial advisors do, right? So that's the kind of thing that we do.
Yeah, nice. Are you seeing a repeat now of 2008? I mean, certainly not, how should I say, the song sounds similar, but it's not the same. We know that, right? Because the conditions of 2008 are certainly different than they are today. But are you seeing the same sort of reactions, I guess, from maybe your client base or the people reaching out?
Yeah, it's different for sure. I mean, now granted, I think more people were blindsided, and it could just be because when we have people reach out to us, they've might have been following my podcast for the last couple of years, and so maybe they were already starting to prepare for something like that. Where a lot of people in 2008, I mean, most people were just like, man, I'd love to be able to create passive income, but I'm now broke. All the equity's gone out of my property that I thought was good. All the people that actually thought following Dave Ramsey's advice would work, right? Like, they loaded up their 401k and then they watched that tank. and then they loaded up money in equity in their real estate property. Like I actually had made that mistake too. And then all of a sudden values tank and you can't get that equity out because the banks don't want to give it to you. So I feel like in some ways people are more prepared for that. But that's why, like you said, I think Mark Twain says history doesn't repeat itself, but it sure looks similar, right? Or something like that. It's very similar here. I think there's still a lot of speculation. I was seeing a quote today online where someone's saying, "Hey, if you could do stock options trading, you can make 8 to 10% a month." And I've heard that before, and every time that's happened, every time either they stop making those returns because markets change and then their strategy doesn't work anymore, or two, the SEC shuts them down and you lose your money anyways because they go bankrupt. Either way, it's always a bad situation, right? But the one place, remember I mentioned, I like to do whatever's the opposite. So if someone says real estate, I think is going to tank, that usually means I should buy real estate. You don't hear people so much talking about the stock market. They always wonder, but then there's so many voices out there saying, no, it looks like it's going up. That soft landing, we didn't even land. We just kind of glided down at a low altitude and then we're just coming back up. Like we're coming back strong. The consumer's resilient, right? We hear all this stuff. That's the stuff I watch out for. That's why the crypto space, you mentioned that, like anything that's based on arbitrary non-value numbers that doesn't have a real asset backing it up, those are the people that are going to get hurt when they're speculating, when they use a lot of debt to speculate, especially. And we're already seeing the crypto space getting hammered left and right. I actually had somebody reach out on Facebook yesterday and say, "Hey, do you know any attorneys that focus on companies stealing your money in crypto?" Because that happened to them and they're not the first. I remember there's like the 9% savings account fund and all of a sudden now that's shut down. And I had a client that I said, I can't give advice, but I'm like, dude, that's dumb. But he put $250,000 in, lost it. Like that's the kind of stuff that's been happening because people are trying to make it big fast. And like you and I have learned, it's having real tangible assets. And I'll even say this to be bulletproof, right? I'm sure you're probably going to ask that question at some point anyways, like would it be bulletproof? When it comes to investing, the best way to be bulletproof is buy real assets and not just real assets, because that's trick people too. It's real assets that are profitable, that cash flow, regardless of what you think your value add might do, right? If you can get it to cash flow from day one, and then the value add is just gravy on top, then you got something good. And I like what you did, like you pivoted, right? You're like, hey, I'm not seeing the apartment space right now, but in the retail space, they already got their teeth kicked in. There's opportunity here, right? What can I do to make this work for me? Could this even be converted into something else? Like all that kind of stuff. That creativity, that's what gets people not just getting through hard times, they end up thriving through them. That's how guys like Joseph Kennedy, John F. Kennedy's dad, he was worth $4 million in 1929 as a bootlegger. After the Great Depression, well, really during it still, 1935, he went from 4 million to 100 million net worth because he bought up all this commercial real estate in New York because everybody was dumping it. He bought it. He saw the opportunity. He took advantage of it, and he made huge, huge money from that supposed despair, right? That's what I see as the best way to be bulletproof is look for real profiting, cash flowing investments. And I would even say this, if you're in business, focus on getting lean and mean, creating a lot of value in your business so that you are profitable there too. It really comes down to the title of the show of bulletproof cash flow. Cash flow is really the secret to weathering the storm. Otherwise, if you're trying to bank on appreciation, you're going to be like everybody else and you're going to go broke during this time. And then you're going to be the one saying, "Oh, I wish I could have bought that property in 2011 or 2012. You'll be that person this time around talking about that in 2025 or 2028 or something.
Well, that's why we call it bulletproof cash flow, not bulletproof appreciation, right? It's one of those things that when I first created the whole concept, I knew that cash flow is always going to be king. You could never rely on speculation or any type of nonsense like that. So, yeah, man, it really is a big deal to me. That's why I do it. That's why I do it bulletproof cash flow style, right? That's what we do. So good, excellent. Well, listen, we talked a lot about like really protecting your wealth and really preserving wealth and building cash flow. I know you already gave some bulletproof advice already.
Yeah.
Any other bulletproof advice you want to reiterate on or touch on that you'd give to someone who's listening right now? Having a blast so far? You're ready to jump into real estate? Visit bulletproofcashflow.com for free resources and as well as some masterminds there for you to take a look at. Unleash your potential. Go ahead and check it out now.
Yeah, I think I'll reiterate just the importance of being liquid right now. I think, again, having a cash heavy doesn't mean you stop investing. It just means if you had 6 months cash reserves, maybe you want 12 right now. And I've seen this especially with those in the tech industry. Heck, I even got a client that works for a very large bank, and they're already announcing layoffs, another round of layoffs. So he's almost hoping to get laid off because he's like, I just hate this environment. The job stinks. And so I think there's a lot of changes happening worse than what's happening right now. And so it doesn't mean that you stop investing. It does mean that you go for profitable cash flowing investments, but also build up some extra reserves just in case.
Yeah. Love it. Love it. All right, guys. Well, if you want to reach out to Chris, you can reach him via his website at moneyripples.com. Planning for your future is absolutely key, guys. And if you're out there, maybe you're making a big sale and you want to preserve your wealth, which obviously you should, keep it out of the grappling hands of the IRS that has no value to your life whatsoever. Talk to a guy like Chris. He can help you out with some of the planning that's involved with that kind of stuff. All right. Thanks for reaching out, guys. And look forward to seeing you next one. Take care.
You've been listening to the Bulletproof Cash Flow Show. We hope you've enjoyed the show. We know we had fun. Make sure to visit our Apple Podcast page and leave us a 5-star review. We hope you've gotten some useful and practical information from the show. For real estate coaching, events, and resources, head up bulletproofcashflow.com. Till next time.
No information in this episode should be considered specific, personal, or professional advice. Any investment opportunities mentioned on this show are limited to accredited or sophisticated investors. Any investments will only be made with proper disclosure and subscription documentation and subject to all applicable laws. Please consult an appropriate tax, legal, real estate, financial, or business professional for individualized advice.